Morning, everybody. It's Reno Viola. I am the mortgage commando. That sounds so menacing while it's innocent at the same time. I'm here to help you get a mortgage at whatever I have to do in order to get you a mortgage. I'm going to do it. Of course, flying high on this great show of ours is my co-captain, Sandra, the super machine mortgage broker. Good morning and welcome to the show, Sandy.
Good morning. How are you doing today?
I'm great. I'm always great. The energy in this show and the energy in this business is wonderful. I mean, yeah, we're in the middle of COVID, but for some reason, people are just buying houses like crazy. And after the time period from the time they buy until the time they move in, sometimes some magical stuff is happening. And we're going to talk about that this morning, that we don't want that crappy, non-magical stuff to talk about.
Let's talk about that, Reno. That's the dull moments we go, oh, I can't believe they did that. It's those 10 mistakes to avoid making because your mortgage broker will pull out whatever's left of your hair. And I think this has happened to Reno many times because he's got no hair left to pull. So
hey, I'm 22 years old. I should have a full set of hair. Look at me. So we're going to go over these 10, we call them the top 10 mistakes to avoid after a mortgage approval or a mortgage pre-approval. But they're not the only 10. They're just the 10 that come to the top of our mind just for conversation. And let's get into the very first one. Okay, so now we've got you approved for your house, or we've got you a full pre-approval. Everything is cool. All you got to do is go to the next step that we're going to take together. And you guys go and apply. You're so happy that, oh, what the heck? Let's go price some cars. Let's go do this. You're applying for new credit. Okay, that's the number one mistake that not everybody, the unlucky ones make. They go and apply for credit. They're going to need furniture for their house, all that kind of stuff. They're going to apply for new credit. Sandra says, you say?
I said, don't do it. So my big thing is, and they say, well, but Sandy, I don't have to pay for 2 years. It's deferred. Well, guess what, guys? That payment that you're going to have in 2 years, we got to count that now. And most likely you no longer qualify for your mortgage. So buying things, whether it's a car, whether it's furniture, whether it's anything, whatever you do is you're going to call your broker and say, hey, what do you think? And we're probably going to say, don't do it, don't do it, don't do it. Because if you go over ratios, again, that's the terminology that we always throw out there. What it means is you no longer qualify for your mortgage. That's what the long and short of that means.
And every one of these points that we're going to make this morning, you could follow it up by adding some words. And before you do it, check with your mortgage broker. Remember, we're part of your team. We're not, some strange team out in the middle of nowhere that works for the lender. We work for you. And so we try to protect you the best we can and the best we know how. And one of the only ways to be able to do that is if you're frank and open with us. So have that conversation. Say, hey, Reno, I'm happy we bought the car. I'm finally going to be able to buy that Dodge Ram at $85,000. I want to buy one. Can I do it? And my answer will be disappointing because I'm going to say no. Wait until the day you actually move into the house, and then we'll get 10 trucks. I really don't care at that point. But call us, talk to us, talk to your broker.
And that's a valid point you make. Is the difference, what Reno and I do a lot different than many brokers is we actually answer the phone. So if you're calling us to ask us the question, we're going to answer that question. We're going to tell you a straight up answer right up front. We do not beat around the bush because we don't want you to lose your house. Not only that, if you're already at the approval stage and you do this, your mortgage could become null and void. If you read any of your mortgage approvals, there's a little fine line in there that says if you change any of your credit, it will affect or it could possibly affect your mortgage.
Right, talk to us. Simple, talk to us. Always talk to your broker. He is part of your team, so make him part of the decision-making process as well. Okay, point number 2. Sandy did hit on it a little bit at the beginning of her conversation about the last piece, but making any major purchases, even if they are deferred payments. Deferred payments are great. I mean, you get the furniture for no interest. You get to sleep and live in it for 2 years before you have to start making payments. You would think that's okay. Well, the reality is you've taken on a gigantic probably you're going to furnish your whole house. So, $10,000, $15,000 worth of debt as a furniture loan that's not due for 2 years. In the lender's eyes, even though you're not making any payments for 2 years, you owe that money. And so we default to a minimum payment as if it was a credit card. And it's generally, I use 3% of whatever it is. So, 3% of $10,000 would be 3%. And that will throw your ratios off. And by throwing your ratios off, they're going to say, no, sorry, we're not going to close this out. Worse than that, it'll happen 2 days before closing. Because at that point, we don't have really a lot of time to react. They pull the second credit bureau. Now they see something that wasn't there before. And they say, nope, the ratios don't work. Thank you, but no thank you. We don't want to be involved. And it's as simple as that. They're not trying to be bad people. It's just they don't want to get into something that they don't know about.
They really don't want to put you in a position that you can't afford this mortgage. If you can't afford this mortgage, and we hear it all the time, oh, but I can afford it. I have this and this and that, and I pay this amount in rent. It doesn't matter. It really doesn't matter. If the numbers don't work, they don't work. And then we have to say to you, okay, now we can't get you that 1.79% interest rate. We're going to have to take you to somebody that's 4% interest because you don't qualify for that 1.79 anymore. You just threw your ratios out.
Yeah. So, guys, again, we're not trying to be the gloom bringers here. We don't want to be the party poopers. We don't. We just want that mortgage that we got you approved for or pre-approved for to actually continue right through the funding and continue right through the few days after that, which is your moving date, and enjoy the housewarming party and the wine that's going to be flowing at that party. If something changes between the time we approved it and the time you actually move into your house, sometimes there's consequences. Well, a lot of times there's consequences if you make major changes. So that's point number 2. Point number 3 is actually a point beforehand and during, but beforehand primarily is a lot of folks in advance of trying to get their credit straightened out or just trying to make their credit look better, they think that if I take my credit cards that I've got, so, last week I had a $15,000 credit card and I got $15,000, I found it and I'm going to pay, but not only am I going to pay that credit card, I'm going to close that account. Closing accounts is not something you want to do during that mortgage closing process. Just leave everything the way it is. Yes, if you got $15,000 to pay off a credit card, for sure, pay it off. That leaves us room to go do some furniture stuff if we have to. But have that conversation with us, and we'll figure it out. We'll rejug the numbers and rejig the numbers a little bit and make sure that everything still works. But don't go closing any of your credit accounts.
In reality, I don't suggest you do it until you talk to your mortgage person like us. To find out whether it makes sense for you to pay off that debt. It may not make sense for you to be paying off that debt right now. Closing your accounts is a big taboo. Don't do that unless you talk to somebody to make sure you're doing the right thing for you, because this could affect your whole credit profile. I have people that get credit cards and they close accounts, but their history is on the other credit card. So by closing that account, you don't have history anymore. So not only is it affecting you today, it could be affecting you on your next mortgage. That's the big thing here. Just don't be doing things because you think you know the answer or because your best friend told you to do it that way.
So this is a specific, I'm going to tell you a specific case. A couple of months ago, so I had a guy, he had a bunch of credit cards, $3,000, $4,000, $5,000 limits, kind of the regular credit cards, and some credit card company gave him a $25,000 credit card, and they gave it to him on today, like a particular day. And that same day, he closed every other account. So now by the time it catches up on the credit bureau, when we pulled the credit bureau the second time, the lender pulled the credit bureau the second time, what happened was they see this one credit card for $25,000 with zero balance, but it only has 1 month history. They see how old that card is. So 1 month history on a $25,000 card means absolutely nothing. Your credit's not good, it's not bad, it means nothing. When they look back and they see that you closed other credit cards, they don't look at the history. They just look at the fact that you closed your credit cards, and they don't know why. So unless they start asking questions, thing isn't going to go any further. So their easiest answer is to say, no, just hang on, we're not going to close this deal. Remember, it's not as if they got a pile of money sitting in their office corner waiting. I'm talking the lender, waiting to get rid of. It's not that at all. These folks want to do those deals, but it's not money that they need to get rid of. Remember, they're borrowing money in order to lend it to you. So they want to follow certain rules to make sure that everything is covered. Number 4, the biggest one on the list, and we've been telling you during the 3 points prior to this, is your biggest mistake is not speaking with one of us before deciding any changes that you want to do. Sandy, how much time do we spend with our customers coaching on that and walking through?
We do it on a regular basis. And then the biggest thing that we absolutely hate is whenever the customer, or better yet, the realtor calls us screaming at us, how come we don't have an approval anymore? Well, because your client chose not to talk to us about what they were going to do before they do it. They just went ahead and did something. So for us, it just makes more sense that to talk to you in advance and make a plan for now and then after the closing, so that there's no shocks here. So again, talking to us, and we're going to continue on with our topics here, Reno, because believe it or not, our 30 minutes just blows by. And there's some really important mistakes that we need to discuss, probably in more depth than talking to us.
Okay, but don't sell yourself short. You started 5 minutes late. So if you're looking at your clock, that's what the difference is. Here's the biggest one. I can't say how big. As big as the world. This is the biggest one yet, and it happens all the time. Changing jobs or becoming self-employed.
So Reno, you got to tell them the story of yours, because this happens to us all the time. We get clients that change their jobs, and better yet, they don't tell us. How did you find out about your client and you had that dull moment? Like, I can't believe that just happened. Can you tell us about that story that you?
So and you know what, the worst scenarios is when we get a mortgage approved, let's say in January, and it doesn't close until May or June. Lots of length of time, right? If it's fairly quickly, we're on top of everything. But sometimes that 6 months, we just can't be touching that file every day. We don't expect anything to change, so we don't touch it every day. Well, guess what? We're a couple of days away from closing. And a couple of days away from closing, by the way, we get nervous around here too, because we really don't know whether the lawyers completed what they had to complete, whether the house passed the lawyers, not inspection, but certainly leads and that kind of, anything like that. Yeah. Well, anyway, so 2 days before closing, I called the lender just to make sure that everything was still good. And she says, no, Reno. She says, it's not. She says, yesterday I called to get verification of employment for your customer. And the customer's employer, ex-employer, said, no, she had quit 2 weeks ago. So now I'm panicking. I don't know what to do. I'm in the middle of a panic. I'm 2 days from closing. My customer expects to close. The realtor who sent me that customer expects that house to close, because if it doesn't close, it's also going to ruin whatever plans the seller had, because that seller needs the money from that place in order to buy the next place, and so on and so forth. And we never know how many are in that chain, right? So it could be 15, 20 different people that are going to be affected by my customer and the realtor's customers not closing on time on that particular deal. So the scenario was, called. She said, no, she had quit her job 2 weeks ago. So I panicked and I lost it. I didn't know. I don't know. So I called the customer, and of course, not answering the phone. But eventually I got through. So there's another day of worry. And she told me, no, she says, I quit my job because I had a better job offer. And I said, did you not think it might have been important to tell somebody? No. She says, I make 15 cents an hour more. So I left. Well, thank God that we were able to convince the current employer, the new one, remember she'd been there 2 weeks, to waive the 3-month probation period that the new job had. So that's a lot for an employer to do, is to actually waive and change the policy of the company in order to accommodate a new worker that's been there 2 weeks. But thank God they did, and we did close on time, and we found obviously an employer who was understanding and very reasonable, as well as the underwriter and the lender.
The
That was
lender
very
really
reasonable
made.
understanding.
Yeah.
That's what, because most lenders don't have the tolerance. They just, because we're all closing at the end of the month too. That's the other thing too. It's at the end of the month, there's like millions of people closing deals. So it's they don't have time to stop the whole wheel and go and tend to your particular deal. So don't, the biggest one here, don't change your jobs or become self-employed anywhere until you get into the house, move into the house, and sitting in the living room on your own couch.
Yeah. So the next one that we're going to talk about is, once we give you a conditional approval, there's always going to be additional stuff the lender is asking for. If you don't give us the paperwork, this does not close. It's simple as that. So ignoring a lender's request for items. So that means in the approval that you signed, you agreed that you were going to provide the certain documents that lender is asking for. If you ignore those conditions, it's just not going to fund. It's simple as that. We get this all the time, where people get the commitment, they sign the paperwork, they send it back, and they think they're good, and then we got to keep calling them and emailing them and all that stuff. We have to give the lender time to look at the paperwork. We are not their only customers. That's the reality.
And ignoring requests for paperwork, let me tell you how simple it can be. And remember, we're all humans, so we're all under stress during this time, including us. And so you think you've already sent something to us, including bank statements. The biggest one is bank statements, because the lender wants to know where the down payment is coming from, or they want to make sure that your paychecks are being deposited so that it matches the job letter and the pay stub. And they just want to see that everything is smooth. And you have sent us a bank statement showing us what you think the bank wants to see. Well, two things. It can be as simple as, because you've printed it off the screen, there is no name on that particular statement. So, the one that they mail to you and the one that you print at the end of the month has your name on it. That's different. But if you're just printing the transactions from, the first of the month to the last of the month, there may not be a name on that transition. So you think you've sent it to us. I know that I didn't receive anything I can use, because without a name on it, you could have found it on the floor, and that's what the lender's going to think. That's not theirs. They found that. So again, communicate and understand what we're all talking about, and everything will definitely go real smooth.
Next topic, falling behind on your bills. Okay, approvals are great and stuff like that. However, there is times when they will repull your credit. So if all of a sudden on your credit report, it shows that you didn't pay certain bills, it could affect your mortgage. It could affect, it just looks like you just gave up paying bills. And why would anybody want to lend you $200,000, $300,000, even $100,000 if you're not even paying the bills you already have? That is enough reason for them to want to cancel the approval. You have anything further to say about that, Reno?
And that's the point. Don't make anything. You want to have just basically a lily white existence from the time we get this thing approved until after you move in. After that, you can become a rock star again. You can be a party. We don't care. We want you to have fun. We like you having fun in life. But during that process, from the time we get it approved until the time you move in, don't change anything. Even your habits of eating, don't change. If you don't eat pasta ever in your life and you decide to eat pasta, don't do that, because you might get sick and then you might not be able to close. So don't change anything in your life. And if you are going to change, which brings us to the next point, don't forget to tell us. It happens, not often, but it happened. What happens if you and your better half decide that you're going to separate? Well, aside from both of you guys being mad at each other, but one has to leave the house, the other one gets to stay, or whatever we think is going to happen, you've lost half of your income. So my suggestion on separation is, if you can live with each other until a month after you've moved in, different story. Then you need to do what you need to do in life. But keep your broker and keep your lender informed on everything that you want to do. This COVID thing is especially important. With COVID, a lot of you guys went and got CERB. Well, you know what? $500 a week is $500 a week, especially since you made 450. Your life per week before CERB. So that's an extra $50. CERB doesn't count. I can't count CERB as payment for any mortgages. It doesn't count as your income. It's a support system.
Another good thing, not just the income side of it that we should be talking about, is changing your lawyers. So I actually had a scenario this time last year where 2 days before closing, the lawyer calls me to say, hey, I didn't get the paperwork from the lender yet. I'm like, what do you mean? It was sent. I found out that my client had changed the lawyer. So our lenders have to send the paperwork to your lawyer for them to do certain conditions on their part in order for this deal to fund. If we don't have the right lawyer on the file, this deal is not going to close.
And your lawyer needs that paperwork 5 to 6 days beforehand, before closing, in order to be able to do all the title searches and all the legal stuff that the lawyer needs to do. So by not informing your customer, by not informing you, is actually jeopardizing their mortgage. Because at a certain point, the lender's going to say, the lender's going to say, no, I sent it out. So let the close.
Well, and in all fairness to a lawyer, in this generation, COVID-19 in the housing industry has sent it insane. Many lawyers, everybody is backed up. It's taken them something that would have taken them 3 days to do before. It takes them a week to 2 weeks to get done now. So let's be fair to these poor lawyers. They have more than one client. They need to have time to do their stuff and do it correctly for the lender so that they're not getting in trouble either. The other thing that is really, really, really important about informing us about is if you have a price reduction on your property. We're very fortunate, Reno and I, we do work with some realtors that do get us the paperwork with the customer's request, but there is a lot of customers we have that don't want us to know who the realtor is or deal with the realtor. So it is up to you as the client to make sure we get these changes. These will affect whether or not you can get a mortgage or whether or not the approval you have is still valid. So it is really important that if you change your price, that you let us know.
The other thing is, we're going to move on to point number 9, is if you're going to take off, have a vacation, a staycation, whatever it is, if you're not available to talk to us right between like 10 days before closing and right up to closing every day on a regular basis, you're going to go on a vacation. Tell us, and let's pay that $100,000 a minute charge that it takes to get a hold of you on a cruise ship. Okay, let's consider that, and let's make sure that we know how to get a hold of you, because during the process, in the last few days, there are a lot of things that change, from the lawyer side to our side to the lender side. Little things can change. If we have no way of getting a hold of you, you won't close in a few days when you come back. And of course, the big one, aside from not changing your jobs, is don't go co-signing for other people's debts until you've actually finished moving in. Okay, so your son needs a brand new Dodge Ram at $85,000 and he can't afford it on his own, so you put your signature down there. Well, sir, for that signature to help your son, which is a good thing, you will not close your house. So it's your choice. You can have him wait, or you can lose the house.
Because Reno, that comes to a really good point. A lot of people don't understand what cosign means. Cosign means that you're responsible for that debt as well. So it is technically your debt as well. Even though your son is paying for it, it's still your debt. And the down part when you're buying a house is you're responsible for that debt, but you can't use his income, even though he's paying that debt. And that's really important.
So those are just 10 of the points that literally there's hundreds of points between the time you get approved until the time you move in that you shouldn't do. So make your life lily white, transparent, and calm from the time we approve you until the time you actually move into the house. After that, you can start partying. So that's all the time we have for that topic, but I wanted to get one other thing in here. We got a few minutes left here. And again, we got so much emailed last time, but we're going to cover one. And it's important that you understand this. The email goes on to say, can I get a mortgage while I am at a new job and the job has a probation period? Well, the immediate answer is no. But let me follow that right up with a yes. as long as we know what that's all about. Okay. For example, you may have been an engineer for the last 15 years and they recruited you, a new company recruited you, and in their standard offer of employment, not only are you making more money, but it's a standard offer. So it says that, hey, there's a 3-month probation period, even though they recruited you from your other job that you've been doing for 15 years. So you must be something special. Well, we might be able to get a lender to understand that, yes, it's a standard letter, and no, it won't apply to you, and we will be able to do something. It also makes a difference on when that probation period is up, if that's not the case about the engineer thing, because we may be able to get you approved, and by the time you actually move into your new house, the probation period is over, and that's okay because we can count the date of closing as your probation period being ended. So the answer is some of yes and some of no, but the most important part of that answer is get a hold of your broker, be open and honest with them, and I'm sure we can get the deal done. Anything else you got to say for this week, Sandy?
Not a whole lot. Again, I think the whole conversation we're trying to get around is try not to get your realtor frustrated with you because they're going to freak out because all of a sudden you don't have a mortgage. So avoid these top 10 mistakes. And most important, call your broker before you make any changes. It is so important because just like you, we want to see you get into your house just as much as you want to be there. So let us help you plan for that. Even if it means you delaying your current plans of changing your job or whatever it is, it's really important that we have an open communication. Like Reno keeps saying all through this session, let's talk about it.
Yeah, and that's, and again, we'll have a whole show about this, but it's important that we actually have a conversation. You can say so much more in a 5-minute conversation than you can in a 10-hour text. You can't get, yeah, you can close a whole mortgage on text and email. But in order to get all the little details in there for sure, we need to have that conversation. So just pick up the phone or text us and tell us to call you, and we definitely will. Gotta go. Until next week, I'm Reno Viola. I am the Mortgage Commando, sometimes known as the Mortgage Guy. And with me is Sandra Brown, the incomparable machine, the mortgage machine, Sandra Brown. Until next week, we'll see you later.